Larry, thank you for joining us at the One-to-One Oil and Gas today in London.
It's good to be here, Scott. Thank you.
First of all, are you seeing an appetite coming back to the offshore exploration?
We're seeing definite trends in that direction, and I think we're seeing that being driven by reserve replacement. Last year was a singularly poor year for exploration because of the lack of investment. Last year we discovered worldwide less than we discovered for the last 60 years, which was even before my time. So, and that has an effect. The super majors are producing at very large volumes annually. They have to replace that to keep their reserve life going. And as a consequence, we've seen a lot more interest in our acreage. And we've also seen evidence of these companies coming into new countries to undertake exploration.
What are the main drivers of this renewed interest?
I think they're really twofold. Firstly, it's this reserve replacement. It's for them to be able to keep going up the down escalator that they have. But also, as the oil price has gone through the cycle that it has, the cost structure has also followed that. So during the course of the last 2 years, we've made significant investment in seismic in our portfolio, and we've done that at 25% of what it would have cost us in the high oil prices. And we're seeing the same thing now in the rig markets. Rigs that were at $650,000 a day, they're now less than $200,000 a day. So the costs of drilling these wells has dramatically decreased. In Namibia, Chariot had been involved in 2 wells some years earlier, and those wells were in excess of $85 million gross each. Those wells can now be drilled between $20 and $25 million. So we think the system has restructured itself so there's a fit between the price and the cost, and it's a combination of that with reserve replacement, which means that these companies are coming back into exploration.
What are the near-term value triggers for Chariot?
For us, the most immediate trigger will be the Rabat Deep 1 well, which we're drilling in March of next year. This is a well that we've partnered with Woodside and E&I. The Saipem 12,000 has been signed up. It's currently preparing for that program, and we see that being spudded in March during the course of next year. In and of itself, it's a giant potential opportunity, 760 million barrels. To us, that's 77 million barrels net to Chariot, which, if successful, would be transformational. We've also got other assets, other projects within that license, but we've also got all the neighbouring acreage where we have 75% equity. So we've got significant upside over and above just that single prospect. We're also trying to, over the next near term, over the next 18 months, is to see if we can participate in a well in the central blocks in Namibia, which in and of itself also has that scale potential with running room. And we're also targeting a well in the Kenitra Mohammedia area in a different play in Morocco adjacent to Rabat Deep. So we see a very exciting 18 months, which hopefully we've caught the tide right for this return to exploration.
That sounds exciting times ahead. Larry, thank you for your time.
Thanks.